So on my last video, I talked about taxes and I covered the concept of deductions, which are just legal ways of avoiding taxes. So I thought it'd be good to have a video covering the most common deductions. So the ways that the average taxpayer, someone like myself that has one source of income that reports in a W-2, can try to reduce their tax bill by applying them. There are hundreds of deductions out there that you can claim, but today we'll be covering the 8 most relevant from most applicable to least applicable. And before we get started, let me give the same disclaimer that I gave on last video. Let me just give the caveat that nothing in this video should be taken as financial advice. If you have any questions, make sure that you consult an expert. So yeah, let's get to it. The first one is a standard deduction. So in order to make the process of tax filing a little easier and also make it a little more equitable, the government allows you to automatically deduct a portion of your earned income. So it depends on the year. Between 2023 and 2024, they changed it, but it's around $14,000 per person. This means that in the first $14,000 that you make, you don't have to pay taxes. This is why if you ever had a job during a summer internship or like a job during college where you made less than $14,000, you probably got a fat refund when you filed taxes. Most of the people watching this video are probably going to be allowed to claim the standard deduction, except if you fall into one of these categories. Next one. The second most common are traditional IRA or 401k plans. So contributions into a traditional IRA or 401k, not Roth, but traditional, are made with pre-tax dollars, which means that you can reduce your taxable income when you do those contributions. Let me just go on a quick tangent and say that if you do your 401k contributions directly from your paycheck, your employer takes this into consideration when they do their tax withholding. So this is already factored in and you probably will not get a refund from this when you file taxes. However, traditional IRAs is a different case and that's something that will probably boost up a little bit your refund. Contributions in recent years have been changing, but for example, for 2023, you could do $6,500 into your IRA and $22,500 into your 401k. Next one. So HSAs or health savings accounts are also a great vehicle for using a deduction because all contributions are made also with pre-tax dollars. This is why if your employer offers an HSA and you qualify due to your high deductible plan, it can be a great vehicle to reduce your taxes. Then some educational expenses can also be claimed against your earned income. So if you made some money and then used that money to pay for college, or if you took out a loan and now you're paying it back, you can actually claim the interest against your earned income. Now, not super applicable, but if you are self-employed, you can also claim a lot of the expenses against the income that you make from your self-employment. So things like office supplies, a portion of your rent, even your phone bill, and many more can actually be claimed against the income that you make. This is why if you're self-employed, you might want to hire an accountant or just pay for one of the premium subscriptions with TurboTax. Once again, Talk to See does not get paid by TurboTax, at least not yet. I just think it's actually a great service and that's what I personally use to file my taxes. Now, if you own a home and you have a mortgage or a home equity line of credit against it, you can actually claim the interest of the loan against your earned income. Just know that currently there is a limit on the loan size that you can claim against your earned income, which is $750,000. Then if you have an LLC or just a company, because maybe you make some side income or you have an investment property, you can actually claim a lot of the expenses against the income that you made from that entity. And if you have a loss at the end of the year, and you're an owner of the entity and also actively involved in the business of the entity, you can actually use that against your earned income and reduce your tax bill. I'd say this is one of the biggest ways that the wealthy or even not the super wealthy avoid taxes is by having an LLC to their name that they can use against their earned income. And the last one are realized losses, which means that if you sold a financial instrument, for example, so like a stock, at a loss compared to what you bought it from, you can actually declare that against your earned income. Just be aware that currently the cap is $3,000 per year. And this is the reason why people, if they have a stock that is at a loss around December, usually sell it and just take in the loss. However, all of these things that I mentioned are covered when you do your normal tax filing with TurboTax. So don't worry if any of these apply to you and you answer the questions correctly. If you're using TurboTax, this will go into your tax return. So don't worry. Hopefully it helps and hopefully you get a fat refund, and I'll see you next time. Peace.